Hi everyone, welcome back to my channel. Today I'm going to review the positions in my Roth IRA account as of 28th of April. I'm working on the beat SPY strategy where I bought 100 shares of SPY and I'm trying to get additional income from selling SPY calls. So I started on the 31st of January and my goal is to get around 6 to 10% of additional income on top of the returns from SPY itself. So far, the income is over 2%, and it's been about 3 months. So we are exactly, on target, reaching the 6 to 10% goal. I'm also putting any leftover cash into high dividend stocks, Starwood and Rhythm, which is not relevant to our experiment, and I will be mostly ignoring this part. These are all the trades from January 31st till now. So I started January 31st with 100 shares of SPY. I sold one covered call, bought it back, sold another one, bought it back, etc., etc. And finally, last week, I covered the call expiring last week and sold another call with a strike price of 420, expiring 1 week from today. So the expiration a week ago was 2 weeks from, previous Friday. Okay, and I was able to, on each roll or each buy sell, I get some positive cash into my account. So the total so far, I got about $1,100 of cash into my account from selling the covered calls. Last week, I just rolled into the new call option. SPY closed at around 412. The new strike price for the covered call is 420. So that's about 2% difference between the strike price and the price of the SPY ETF. So I consider that out of the money. This week, a few things happened. Well, I got an SPY dividend of $150, which it's less than 0.5%. I also got the dividend from the Rhythm shares. On Friday, SPY closed at around 416, which is less than 1% from the strike price of our call. We know based on my investigation of the time value and time value decay, with 1 week left to expiration, it's actually better to keep the option. Don't roll it yet. So I'm going to keep the option till next week. And these are my positions. Actually, these are the trades, sorry, not the positions. So you can see I received the dividends for Rhythm, the dividends for SPY. And last week, I sold a new 420 call. And as always, I usually use the extra cash that I get from the roll and just put it into Starwood and Rhythm. Okay, how did the market do last week? Well, so this is the orange line kind of shows the price of SPY when we do the rolls or when we enter new position. So in this case, I did the roll on Friday. The price of SPY was around 412. And this is the new strike price, 420. Right? And so since Friday, the market actually dipped and then came back up. So altogether, gain about 1% in 1 week, which is actually quite a bit, but kind of fits well, still within the parameters of the strategy, and we are still below the strike price. SPY is going up, so everything's looking good. One interesting part you can see on Friday, SPY was just running up all day long. It opened actually a little below the closing of the previous day, and then it just kept going up. So these are my positions. The important ones for us, I have 100 shares of SPY and I have one short covered call, and SPY finally becoming profitable. I have some gains from that. And, there's tiny loss on this particular call, but overall on selling, in the aggregate, selling all the calls and getting the profits from the rows, we are very profitable for selling the covered calls as well. So here are the numbers every day, how the account behaves. Normally, I wouldn't do this. I'm just doing this, of course, for the purposes of these videos. Normally, I would just review the position once a week and make sure that everything is on track, decide whether to roll or not, and that's about it. You can see, so this column, the yellow column, is the one that I am actually most interested in. This is the profit or loss from selling all the covered calls. And so far, the profit from selling the covered calls is about $930, which is over 2%, as I said earlier. In a graphical form, again, the yellow is the profit from the calls plus the cash that we get from the rows. You can see initially we lost a little bit, but ever since the middle of February, the strategy is actually quite profitable. I'm getting roughly the same profit from selling the covered calls as I'm getting from the SPY appreciation itself. Actually, I didn't expect that. I assumed that SPY would give me more profit than the calls themselves. So we'll see how the market behaves for the remainder of the year. Most likely, the normal case kind of would be, hey, SPY will gain about 10. This last year was a bad year, so maybe this year is going to be a little stronger. So say let's 10-15% for SPY, and the covered calls hopefully will give us somewhere between 6 to 10% of additional income. So plans for next week. So I want to reinvest the $150 that I got from the SPY dividend and buy some SPY shares. The covered call is expiring in just 1 week. So whether I like it or not, I must roll it. And I will continue monitoring the position. There is a interest rate decision this coming Wednesday. So that might kind of affect the markets, but we'll see. I don't expect any large moves, but I will monitor the position, especially on Wednesday, and make sure that in case SPY moves up too quickly, that I might need to roll a little bit earlier. But other than that, I'll just hold the position till Friday and roll to options expiring on the 19th of May or possibly even later. That's all for today. If you like my presentation, please click the like button, subscribe to my channel. I'm planning to add additional option school presentations, kind of explaining the strategy that I'm doing and maybe some more about covered calls. And there are already 2 interesting presentations on time value and time value decay, which I find very interesting. So until next time, happy trading.